anytime you see kind of a historically extreme move in something, right? So we saw like the first half of the year had like the biggest sell-off in bonds, in like modern history. It was super contrarian to want to go in and be like, maybe we're topping in yields, or maybe, this is a little bit overdone.
Hello and welcome to Wealthy Value. In today's video, crypto counselor and popular investor Lyn Alden updates about Fed's decision to increase rates by 7 to 5 basis points once again, its impact on the economy, and most importantly on cryptocurrencies. She also talks about the biggest lesson that Luna's collapse taught us and why it is important to hold self-custodial Bitcoin. Make sure to stick around till the end of this video where Lyn Alden shares her insight on Bitcoin versus gold performance this year and whether or not the Bitcoin bottom is in. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
In general, if you could buy from people that are forced liquidators, that tends to be a decent position to be in, right? So if you're buying like oil, when oil went negative, and if you're buying Bitcoin, I think from whales that are like, got over their skis with, using Bitcoin as collateral and then buying all coins on leverage with it, and they're going bankrupt. So, I'm always happy to be a buyer of people that are getting liquidated. When something stops going down despite bad news continuing, that's generally a good sign for a reversal. Like, you've already priced in pretty catastrophic news.
Yeah.
If you look at various, just say on-chain indicators or other things like that for Bitcoin, it's in one of those like firm value zones where, it's below its on-chain cost basis. So people bought Bitcoin and they took it out, put it on their hardware wallet, and those prices. I mean, if you can run analytics on the blockchain and determine what is the average price that each Bitcoin last moved, or each fractional Bitcoin, each UTXO, and when you aggregate those together, you get what is essentially an average on-chain cost basis. And historically, when Bitcoin goes slightly below the average on-chain cost basis, that generally starts marking, if not the bottom, at least kind of a deep value range that is, generally been, looking back 3 years in the future, a really good buying opportunity. And
Right.
so, but it's always a thing. I mean, the future is never, just because something in the past happened, 3, 4, 5 times doesn't necessarily mean that the future has to play out like that. And so I've been looking at, just strength of the network, development on the Lightning Network, kind of some of the startup capital going into that space. The maker of it was CoinKite. They make one of the hardware wallets. They were saying that they had a spike in sales during that liquidation, which is not something they normally see. So there's kind of a lot of buyers getting into some of the Bitcoin self-custodial hardware. I think there was an urge of people wanting to take their coins off of some of those lenders and
Right.
things like
Oh, for
that and get
sure.
them
For
back.
sure.
So I'm pretty optimistic long term on the health of the network. Generally, it does pretty poorly in falling PMI environments, pretty strong in positive PMI environments. But one thing we've generally noticed also in history is that Bitcoin usually bottoms before PMI bottoms. And I think that's in large part because liquidity tends to bottom before PMI bottoms. Well, so that was on track with expectations. So there's a minor probability of them going extra hawkish. They didn't do that, so they took that off the table. The immediate response has been a drop in the dollar, a drop in treasury yields, and a jump in, stocks, gold, things like that. And so kind of a risk-on response. Sometimes these responses get unwound the next day as market participants have more time to parse the data. So I'm always very hesitant to read too much into initial responses. But in general, what we're seeing out of markets, the longer-term data with yield curve inversion and kind of the weak economic indicators, is that the market is starting to, I think put a ceiling on what they expect the Fed to eventually be able to hike to, both
Yeah.
in terms of forward expectations of rate hikes. I think are they've been diminishing, depending on, there's multiple indicators that show that. So I think that's kind of the classic long-term debt cycle thesis, is that they find it very, very challenging to get the structurally positive real yields when debt is this high, even when inflation is substantial. So gold has held up better than the S&P 500 this year, even though it's not been obviously very, very great overall. And it generally does pretty well in those declining PMI environments, so economic deceleration, and generally underperforms during rising PMI environments. Gold's performance over the full cycle has been rather disappointing, right? It didn't go as high as many people thought, and I would have expected it to probably be over 2,000 here, but it's not. I think it makes more sense when you consider like what Incrementum does. Like they have like a fund that's like gold and Bitcoin.
Yeah,
and it
Ronnie Stuferle.
Yeah, and it harvests that volatility that occurs between them, right? So Bitcoin generally does better in risk-on environments. Gold generally does better in risk-off environments. And what they share in common, obviously, is that they're scarce monies that can be self-custodied, right? That's how they're perceived. And of course, they have different strengths and weaknesses, different risks. And so a basket of that gets rebalanced has actually done quite well, over the past several years. Gold has somewhat struggled relative to Bitcoin, but of course, Bitcoin had really sharp moves down at certain points as well. And so I think that what happened to gold is less surprising if you consider that there was some degree of market share dilution. Some people that might have otherwise bought gold bought Bitcoin, and even though it had a big crash, it's still much higher lows. And so there is a contingent that has just gone into Bitcoin, at least so far. So I kind of put those together. And then gold miners, they've had the challenge of their expenses, like their energy expenses are high, while gold has kind of been in this range, right? Mm. And so I think the real test will be what happens when the Fed stops hiking, due to just the market's putting a lot of pressure on it to eventually stop hiking. I think that's where it's hard for gold to do a ton in dollar terms when the dollar is going straight up.
Yeah, right.
But I think that when you start to get, kind of like we talked about, potentially a local top in the dollar, and kind of a realization that the Fed can only fight inflation so far, and that it probably needs an extended period of negative real yields, that's where I think you could get a little bit more demand in gold. And so we've kind of washed out a lot of the hidden leverage. Some of it I saw coming, like the whole Luna fiasco. I wrote extensively about that, and even talked about that they might have to sell their Bitcoin into a weak market that could mark a major capitulation. So that kind of played out exactly as feared. Whereas the Three Arrows Capital liquidation, kind of the second leg, I mean, they were actually crippled by the whole Luna thing, but the whole second shoe to drop was that Three Arrows Capital, and then the whole kind of a cross lending environment.
Right.
So we got like that 1-2 punch that really kind of started with the Luna fiasco. But I'm more optimistic on the network now than I was, 6 months ago. It's something I've been, in my research reports, I've been saying, okay, I'm bullish on Bitcoin long term, but falling PMI environment, it really could be either way here. And I started writing about Luna. But now that we've kind of had some of these capitulations, I do like it here, pretty long term. And then the grayscale thing's interesting. I mean, you're getting at a 30% discount to NAV. I think the best Bitcoin is self-custodial Bitcoin. But there are pools of capital that, let's say they want to slice in their IRA or something. They want some sort of paper representation of Bitcoin's price within their diversified pie of assets. And GBTC is still one of the ways to do it. It's partial play on Bitcoin price itself, and then it's also partial play on what is the probability in the next, say, 3 years that a spot ETF gets allowed, right? So Canada has one, some other countries have one. The United States is so far not allowed one. And so if GBTC could ever convert to an ETF, they could, that difference could be arbitraged quite quickly. I mean, ETFs, that's how they're different than those closed-end fund type of holdings. And so you basically have the combination of Bitcoin price action and then potential for closing of that gap. But of course, you also have risk of, if it goes 30%, there's nothing preventing it necessarily from going to like 40% discount to NAV if things get worse. So there is downside risk, but I do think GBTC is a reasonable paper representation of Bitcoin if someone does have that long-term view. But of course, they have all that counterparty risk and things like that.
So what are your thoughts about Lyn's perspective on Bitcoin versus gold performance? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.